JP Morgan's 2026 housing forecast just came out, and interestingly enough, it's relatively similar to the one that I put out about a month ago. But before I go over that real quick, I want to talk about the MLS numbers and what we saw over the past week. So the past week, we saw 7,831 homes hit the market. Of that was 7,017 were brand new listings. 814 were homes that came back on the market. We also saw a little over 12,000 homes come off the market, and in those numbers are broke down to homes that are in option, pending, sold, expired, withdrawn, canceled, and all that good stuff. Now with that, we're going to go over those real fast. So we saw 650 homes put into option period, 4,247 homes were put into pending, 3,168 were sold, and then the numbers just keep going on down. Now price reductions, we've noticed each week price reductions keep ticking up more and more, and that's going to be a seasonal trend. I have a funny feeling we'll see it start to peak out once we get around April, May, maybe around that time. Definitely, I would say June and July, where we're going to be hitting most likely about 10 to 12,000 price reductions every week. Who knows? We'll find out as time comes on. Interest rates. The interest rates actually came down a good amount. Now, if you remember, not that many weeks ago, we saw that little drop in interest rates where we did see interest rates drop down to that 5.99 range. And then they jumped right back up where they were in the 6.20 to 6.30. But now we've actually seen them come down where today's 30-year fixed rate is sitting at 6.04. Understand it's going to depend on where your position is as a buyer. Might be a little bit lower, might be a little bit higher than that. But let's take a look at JP Morgan. What do they think is going to happen over the next year? Well, they believe, and I have a similar belief, that the 30-year fixed mortgage rate is expected to stay above 6% as we move through the year. Despite the Federal Reserve most likely starting to do some rate cuts, which will probably take place. I'll be very surprised if the Fed doesn't start to cut rates once we get a new Fed chair here in a couple months. Now, builders are also offering some pretty incredible incentives. This is what they're noticing. They're seeing interest rates in the 4 and 5s with builders using in-house lending. We're seeing new construction do some pretty significant price reductions. We're definitely seeing a lot of free upgrades with some of these new constructions as well. We're also seeing builders offering these 3-2-1 buy downs, but I would encourage buyers to be careful if you decide to use this product and really base your purchase. How would I say this? Make sure that you can afford the home once you've finished out that 3-2-1, because if interest rates don't come down and you're not able to get a lower interest rate, well, when that third year rolls around, unless you're making more money than you were planning on, you might find yourself in a bad position. So be real careful when you're taking advantage of these 3-2-1 buy downs. Now, home values, according to JP Morgan, and I would agree with them, are expected to just kind of flatline with moderate growth as we move through 2026. And builders are trying to walk a very fine line right now. Builders want to have spec homes. They want to have homes that are building and going up, so that'll generate some excitement for buyers. But at the same time, they don't want to overbuild and have too many spec homes sitting in the subdivisions, because that's overall going to affect their value. If there's too much supply in these new homes, well, it's going to make it harder to sell those homes for a price that makes the builders happy. Also, if you're an individual that you've bought in, let's say, the past 5 to 3 years, and you're in an area where you're competing against new construction, your market is going to be very different than if you're in a more well-established neighborhood. And JP Morgan feels that one of the main culprits to low inventory right now, because we're sitting at about 1.3 million homes short of where we need to be according to them. But one of the biggest culprits for this is the lock-in effect, where you have homeowners that are sitting at a 2.5% or 3.5% interest rate, and man, they sure love to buy a new home, but they sure don't want to get rid of that low interest rate. But what do you think? And did you watch my video that I put out about a month ago? Because I'm telling you, it was very similar to what these folks put out. And I say either we're both right or we're both wrong, and only time will tell. But what do you think? Do you think that this is accurate? Do you think interest rates are going to get below 6% this year? Do you think home values are going to crash, flatline, or actually increase as we move through 2026? I'd love to hear your thoughts in the comments below. And until next time, I hope you enjoyed this video. And if you got some value out of it, if you could share it with a friend or family member, I sure would appreciate that. Until next time, hope you have a great day.